Warren Buffett, often referred to as the Oracle of Omaha, is renowned for his unparalleled success in the world of investing. His insights and strategies have not only made him one of the wealthiest individuals globally, but have also inspired countless investors to follow in his footsteps. In this video, we will delve into Warren Buffett's perspective on long-term investments in the S&P 500 Index Fund, exploring the significance of his approach and the potential growth it offers. Warren Buffett's investment strategies are highly regarded for their simplicity and effectiveness. One of the key aspects of his approach is the emphasis on long-term investing. Buffett famously once said, "Our favorite holding period is forever," highlighting the importance of patience and perseverance in the world of investing. By focusing on the long term, Buffett believes that investors can ride out market fluctuations and benefit from the overall growth of the economy. When it comes to choosing investment options, Warren Buffett has often recommended the S&P 500 Index Fund as a solid choice for both seasoned investors and beginners. The S&P 500 Index Fund is a type of mutual fund that tracks the performance of the 500 largest companies listed on the U.S. stock exchanges. Unlike actively managed funds, which aim to outperform the market through stock picking and market timing, the S&P 500 Index Fund offers a more passive approach to investing. In contrast to other investment options like target date funds and new index funds, the S&P 500 Index Fund stands out for its simplicity and low fees. Target date funds, for example, are designed to automatically adjust the asset allocation of the portfolio based on the investor's age and retirement timeline. While these funds offer a hands-off approach to investing, they often come with higher fees and may not always outperform the market. By investing in the S&P 500 Index Fund, investors can benefit from the overall growth of the U.S. economy and the resilience of large-cap companies. Over the long term, the S&P 500 has historically delivered solid returns, outperforming many actively managed funds and alternative investment options. Warren Buffett's endorsement of the S&P 500 Index Fund underscores the value of long-term investing and the potential growth it offers to investors who are willing to stay the course. Warren Buffett's investment journey is nothing short of legendary, starting with a modest sum of $114.75 that he invested in 1942. Fast forward to today, and that initial investment would have grown exponentially, thanks to Buffett's unwavering commitment to long-term investing and his strategic focus on the S&P 500 Index Fund. In 1942, Warren Buffett, then a young teenager with a keen interest in the stock market, made his first investment in 3 shares of Citi Service preferred stock at $38 per share. With a total investment of $114.75, Buffett kickstarted his journey towards becoming one of the most successful investors of all time. If we were to calculate the equivalent value of that initial investment today, factoring in the growth of the S&P 500 Index Fund and reinvested dividends, it would likely be in the millions, showcasing the power of compounding over the long term. One of the key factors that contributed to the remarkable growth of Warren Buffett's initial investment is the impact of reinvesting dividends in the S&P 500 Index Fund. Unlike some investment options that pay out dividends to investors, the S&P 500 Index Fund reinvests dividends back into the fund, allowing for greater potential growth over time. By reinvesting dividends, investors can take advantage of the compounding effect, where earnings generate additional earnings, leading to exponential growth of their investment portfolio. Warren Buffett's success story is a testament to the power of long-term investing and the compounding effect it can have on wealth accumulation. Over the decades, Buffett's investment in the S&P 500 Index Fund has not only weathered market downturns and economic uncertainties, but has also continued to grow steadily, outperforming many other investment options. The remarkable growth of Buffett's initial investment showcases the potential for wealth creation through disciplined investing and a focus on the long term. Warren Buffett's historical investment journey from a humble $114.75 in 1942 to a substantial sum today highlights the transformative power of compounding and the value of staying invested in the S&P 500 Index Fund over the long term. By following Buffett's example and adopting a patient and strategic approach to investing, investors can potentially achieve significant growth and financial success in the years to come. Investing in the S&P 500 Index Fund, as advocated by Warren Buffett, offers a multitude of long-term benefits that can help investors achieve financial success and build wealth over time. Buffett's timeless advice on remaining calm during market downturns and staying invested for the long haul underscores the advantages of the S&P 500 Index Fund as a reliable investment option. One of the key pieces of advice that Warren Buffett often imparts to investors is the importance of remaining calm and rational during market downturns. Buffett famously said, "Be fearful when others are greedy and greedy. when others are fearful, emphasizing the value of maintaining a long-term perspective and not succumbing to short-term market fluctuations. By investing in the S&P 500 Index Fund, investors can benefit from the resilience of the U.S. economy and the overall growth trajectory of large-cap companies, which have historically weathered market downturns and economic uncertainties. Another significant advantage of investing in the S&P 500 Index Fund is the low fees associated with this passive investment option. Unlike actively managed funds that charge higher fees for stock picking and market timing, the S&P 500 Index Fund offers a cost-effective way to gain exposure to a diversified portfolio of top-performing companies. By minimizing fees and expenses, investors can potentially enhance their overall returns and maximize the growth of their investment portfolio over time. The resilience and diversification of the U.S. economy play a crucial role in driving returns for investors in the S&P 500 Index Fund. The S&P 500 represents a broad cross-section of the largest and most established companies in the U.S., spanning various sectors and industries. This diversification helps mitigate risk and volatility, providing investors with a stable foundation for long-term growth. Additionally, the U.S. economy's ability to adapt to changing market conditions and technological advancements further enhances the potential for sustained returns in the S&P 500 Index Fund. So the S&P 500 Index Fund offers a host of benefits that align with Warren Buffett's investment philosophy of long-term patient investing. By remaining calm during market downturns, taking advantage of low fees, and leveraging the resilience and diversification of the U.S. economy, investors can position themselves for steady growth and wealth accumulation over the years. Buffett's endorsement of the S&P 500 Index Fund underscores its value as a reliable and rewarding investment option for those looking to secure their financial future. Warren Buffett's insights on long-term investing in the S&P 500 Index Fund serve as a beacon of wisdom for investors seeking to build wealth and secure their financial future. By summarizing Buffett's key points and encouraging action, we can gain a deeper understanding of the benefits of investing in the S&P 500 Index Fund and take proactive steps towards achieving their investment goals. Buffett's emphasis on long-term investment strategies underscores the importance of patience, discipline, and a steadfast commitment to staying invested through market fluctuations. By adopting a long-term perspective and focusing on the overall growth of the economy, investors can harness the power of compounding and potentially achieve significant wealth accumulation over time. Buffett's timeless advice serves as a reminder that successful investing is not about timing the market, but rather time in the market. For viewers looking to capitalize on the potential growth opportunities offered by the S&P 500 Index Fund, now is the time to take action. By considering the S&P 500 Index Fund as a core component of their investment portfolio, investors can benefit from the diversification, low fees, and resilience of the U.S. economy that this passive investment option provides. The S&P 500 Index Fund offers a straightforward and cost-effective way to gain exposure to a broad range of top-performing companies, positioning investors for long-term success. In addition to exploring the S&P 500 Index Fund, viewers are encouraged to take proactive steps towards further investment opportunities that align with their financial goals and risk tolerance. Whether it's diversifying their portfolio with international investments, exploring emerging markets, or delving into sectors with high growth potential, investors can leverage Buffett's principles of prudent investing and strategic decision-making to build a robust and resilient investment portfolio. In conclusion, Warren Buffett's advocacy for long-term investing in the S&P 500 Index Fund serves as a guiding light for investors seeking sustainable growth and financial security. Through the S&P 500 Index, you can benefit from potential growth and embark on a path towards financial prosperity and long-term success. The time to invest in your future is now. Seize the opportunity and pave the way for a brighter financial tomorrow. However, there may be even better than this, although with less immediate returns, though a carefully crafted and updated portfolio. If you want to know more, click on the first link in the description.